I think that is the big question today. Can this rally when it comes to the S&P and NASDAQ continue? And also, what did you make of what I'm calling kind of obtuse comments from Jay Powell yesterday?
Yeah, look, I think in terms of the S&P continuing, I think it's a very concentrated market, right? We've talked about the seven stocks outperforming for many reasons, but their multiples are expanding more and more. And I don't think you can really have a healthy, functioning market for the intermediate or long term with such a concentrated performance. Now, in terms of Powell, look, it's going to be, a data-driven type of decision-making process for the Fed that will continue, in my view. My expectation is I don't think, interest rates are going to, deviate much from where they are now. I certainly don't see, interest rates moving up, and I don't see them coming down, especially given the inflation expectations continuing.
All right, so I know you are worried about some of the narrowness in the market. You actually gave us a chart that looks at the net income expectations going into next year. We're going to show the chart. Give us a sense. Give us an interpretation of this. What does this tell you about the health of the market going forward?
Yeah, sure. So my friends at Strategist Research actually put this chart together, and I think it's very telling. When you think about the overall earnings growth and growth expectations, across the S&P 500, those seven stocks are a big part of the earnings growth and have been, and we're expecting to see in 2023 and in 2024, while the other 493 stocks have actually dipped. So when you look at this, even not only the concentrated market performance, but the concentrated, earnings expectations, I also don't think that's healthy. So I don't think it bodes well for broader market performance.
So with that ominous outlook right now, showing us that chart again from Strategist, thank you to them. What's your WEX word of the day?
Look, is diligence. I think all investors have to make sure they're very diligent when they're looking at stocks to buy.
All right, so speaking of, you have a pick for us. It's in the hydrogen space, actually down year to date, pretty sharply down. Why is that a great buy right now?
Yeah, so the company I'm going to speak about is Air Products. They are an industrial gas company, so they're a big part of the energy transition and gas. They have a number of gasification projects. When you think of them, they're manufacturing hydrogen. Hydrogen, without a doubt, is going to be a part of the energy transition for years to come. Okay. And when you think about the inflationary aspects of some of the projects and these big projects that they're building, I mean, these are multi-billion-dollar projects.
Is your pick. Patrick, before we let you go, I want to talk to you about one more thing. CNBC releasing a new generation lab survey this week called Money and Youth in the USA. It's tracking the opinions of 18 and 34-year-olds. We're going to show the audience the number. Right now, only 14% of Gen Z and millennials say they're a homeowner, and a little more than half of them say mortgage costs and interest rates have impacted their decision on whether to buy. What does that say to you? What does that tell you about the health of the economy?
Well, look, it shows you that people are definitely worried, about future purchases of homes, right? I mean, the cost of doing so has gone up so dramatically compared to where it was for 10 to 12 years. So, the fact that potentially, consumer spending overall and certainly purchasing new homes, I think that demand could be certainly muddled for the near to intermediate future. So it is a concern with the economy.